Hey everyone, welcome to the Smart Economy podcast. Today we're joined by Caspar Sauter, the co-founder at D8X, a company that is building it's a DEX that's building perpetual futures.
Thanks a lot for having me. And yes,
Okay, I just wanted to make sure that I got it right because
you got it. Yes.
you have kind of a bunch of really cool hats with Quantina and then D8X and some of the great test network that you guys have done and some other exciting news that's coming up on the roadmap. So I just wanted to make sure that I got that right. To kind of kick off the conversation, when I was doing my background research on the work that you do and your team on the Quantina LinkedIn page, it says that Quantina is creating incorruptible financial machines serving people for a fairer world. So I just think that that is a fascinating kind of mission statement. So, how did you and your team come up with that mission statement? And from your perspective, how do these decentralized financial machines create a fairer world?
So Quantina, our software company, has been founded by me and my co-founder, and our background is TradFi. So we spent a long time in TradFi, working at relatively large banks. And one of the key things that we saw there is that regulators, the state, but also banks, they spend tons of resources in order to build a whole like controlling framework. They call it compliance, they call it risk, to control the middleman, right? And we both were fascinated since the start to be able to actually code machines, financial machines, do not need that level of control because there's no middleman to control in the first place. So this is kind of the starting point of the mission statement. And I fundamentally believe that build machines that cannot be corrupted, do not rely on somebody who has to make the right decision because it's coded in a way that works, can help to fix a lot of the issues we see with traditional finance. And that's kind of the origin story of the mission statement.
I hope I'm not like kicking a hornet's nest here, but when we think of like banks and traditional financial institutions, like intermediation is kind of their bread and butter. So, don't these decentralized networks kind of cut into their opportunities to make money, to manage, grab, hold on to power? What are the ways in which folks at banks are thinking about this technology when it kind of eats into their business models?
Well, yes, they do it in the business model at some point, but I think right now large banks, they do not really think about DeFi. At least they might think about crypto as an asset class that they can offer to retail clients, for example. So I think, at least from what I'm seeing here, first and foremost, the interest of those banks, if you look, for example, at Swiss banks, is to offer retail clients trading and earn fees on that. So kind of the classical model, just expanded to a different asset class. I don't think they are playing around a lot with decentralized financial applications because, I mean, your point is right? This kind of goes against what they stand for.
So, you're based out of Switzerland, correct?
Indeed, yes.
So I saw we're recording this in the last week of April. And I recently saw on Twitter that there is some sort of proposition being put forth for a portion of the state treasury to be held in Bitcoin or something to this effect. So, since I live in the US and it's a regulatory mess here, I'm always jealous of forward thinking countries. So, what are kind of the regulators and the policymakers and the folks in charge in Switzerland? How are they thinking about Bitcoin and digital assets? And we'll just stick with the asset class.
Yeah, so I mean, I wasn't aware about that proposal, to be honest. I know that, for example, Swiss pension funds. So in the Swiss pension system, you now have the option to invest part of your pension funds into Bitcoin, which is a recent change that happened a few weeks ago. But in general, if you look at how regulators and also politicians look at crypto in Switzerland, it's kind of open. So they have been relatively early in proposing legislation that I would qualify as pragmatic. And they also managed to create kind of a niche. So you have many foundations which are in Switzerland that are active in the space. You have many companies that try to do stuff. So I think from that point of view, the country is relatively open. I think the financial market regulator called FINMA understands that you cannot simply look at truly decentralized finance like you're looking at traditional finance. So there's, at least from what I perceive and understanding, that same risk, same rules is not really applicable here because the risks are not the same. So that, I think that's a key insight that a regulator should have if he thinks about a truly decentralized system, and that is very interesting from our point of view, obviously. But it's also involving. It's not clear. It's it's not set in stone. Let's say.
Yeah, I mean, we're definitely in the I think it was Mahatma Gandhi who had the first they ignore you, then they laugh at you, then they fight you, then you win phase. And I feel like to a certain extent, we're in the then they fight you phase in a lot of different parts of the world. Some areas look a little bit more beneficial towards this emerging industry, and some don't. So I'm kind of jealous for folks who live in forward thinking regions of the world. So thanks for kind of taking that little sidestep with me. Why I'm really excited to have this conversation with you is you bring a really interesting background in academia. You have a PhD, and your thesis was centered on economics, political science, and social sciences. I myself studied urban planning, which was a multidisciplinary field as well, where we had to think about all sorts of different disciplines, from economics to social concerns to environmental concerns to engineering, you name it. So I love the kind of multi-focused background that your thesis was focused on. So can you briefly share what your PhD is in, what your thesis was on, and how you defended it, and kind of what made you want to study those depths of economics?
So what I did ultimately was a heavily data-driven thesis that we looked at distribution of emissions around the world and how that connects to economic activity. So I majored in economics. I did my grad school in economics, and I did what I would say applied economics as a main like thesis field. Kind of like almost 10 years ago when I defended, so some time back. But what I really liked is trying to understand, also see the data and work with the data to understand what happens. So I, for example, tried to understand how to build a good index to measure how different countries deal with climate change policies, which is at the end of the day a purely data-driven thing where you just try to understand how you can make sense of the data that is around. And my goal was always to try to get a grasp of how stuff works. I like to think in models, try to have a simple but robust way to look at things, and for that economics helps a lot.
Yeah, very cool. And you kind of gave away the time frame in which you were defending your thesis. And maybe 10 years ago, 2014, Bitcoin itself is 5 years old, 4.5 years old. When I was in grad school 10 years ago, I remember just looking at a news article about Bitcoin dropping half in price and me just being like, oh, that's a crazy, scary asset. And I just ignored it for another 4 years.
Yeah, I
Um,
feel you there.
so were your economics friends? Were your professors? Were grad students? Were undergrad students talking about Bitcoin? Were you talking about it back then? Was it kind of like a joke? What was the general vibe like?
I think wasn't much of a topic at the time because like grad school, it was like 2012-ish. So for sure wasn't a topic for me in 2012, unfortunately. But I think around like 15, 16, we started to discuss loosely about, monetary policies and what it means to, and that was kind of interesting, also from an academic point of view. And then Ethereum and the possibility to actually build like financial tools on the chain even in an immutable way, that was kind of the turning point for me, trying to understand.
So it was like the developability on Ethereum and not necessarily like the potential macroeconomic impact that an asset like
Both,
Bitcoin could have. Okay.
both. But the first one was more like the potential impact of Bitcoin was more like a philosophical thing, I would say, whereas the second one is kind of something you can actually do, right? So you can actually build stuff, which is great, right? I mean, that's so that for me was realizing that that's possible and that you can build tools was kind of a breakthrough. And so the same for my co-founder.
And did you, before you were working on what you're working on now, did you dabble in like blockchain development? Did you just kind of keep your ears to the ground and read papers? How did kind of your genesis as a builder start?
So I kind of mainly followed the space. I tried to do some consulting work for some projects, try to help them on financial engineering questions and things like that. And then gradually moved towards D8X and Quantena, and there really started building stuff. So the background is kind of a bit a mixed background between my hat as an economist and how you would design stuff, and my coding skills are kind of, let's say, secondary. I would qualify them. Definitely not the best developer, and I also mainly have like a background in quant things. So I used to work in Python and in R, and it's my kind of my genesis of how I came to where we currently are.
So, mentioning your quant background, you actually spent almost 7 years at UBS, a global firm providing financial services in over 50 countries for folks who aren't aware. And you were working on models and performing quantitative analysis. So, what were and I love this because not only do you have this PhD in economics, but you also have experience and boots on the ground working for these institutions we're trying to replace or improve or however you want to relate to it. So, what were sort of the regions of the world you were focused on while you were at UBS? And what was some of the work that you were doing there as it pertained to quantitative analysis?
So I did build up different teams in Europe and in Asia. And what we did is we looked, so banks, they use models, like quantitative models to do stuff. They use models for decision making. They use algo trading, for example. They have models behind that. They use also models for risk assessments. And if they interact with like regulators ask them to run, for example, stress tests to understand how the bank would behave in case of a stress event. Now, all this is based on a large battery of models. And what my team did, is they looked at those models and tried to understand whether or not the models work, what doesn't work, and how you can improve them. So it was kind of a very geeky job, if you want. So you really need to like models. But it was interesting because you have an insight in how banks, but also regulators think about controlling the middleman, right? So because all this, or a large part of that, is about how you different ways of controlling the middleman. And so the team was composed of economists, mathematicians, statisticians, physicists. Doesn't really, I mean, kind of quantitative people, and we assess those models and try to say whether or not the model works or doesn't work.
So, when you're looking back on some of the models that were probably the most accurate, what were some of the key ingredients that made a model accurate? Or what was, yeah, I hope I'm not putting you into a corner or painting you into a
No.
corner, but like how accurate were these models? And um,
Models are always models, right? So you are always wrong by definition. Simpler models, I think, work better than very, very large and complicated models. For a time, I looked at forecasting models, so models that are used to forecast macroeconomic variables. And I mean, the longer you forecast, the worse, right? I mean, that's clear. And the more, let's say, if you look at if you try to forecast oil prices, for example, which are heavily affected by like exogenous shocks that you cannot really model, you have no chance, right? You're lost. So I think the key thing, and that's also something that is important for DeFi, I believe, is to understand that you actually need to look at your models and you need to test them. So also behind D8X, for example, there is an underlying model of how risk is managed in the exchange. And one tool which was very useful, which traditional banks do, stress testing, can be applied essentially one-to-one on DeFi protocols. So you can stress test a protocol. You can see how, for Gauntlet, for example, is doing that, right? And we do that as well for us. How do does the protocol react under different simulation assumptions, under different stress scenarios, and what's the consequence for the user ultimately, right? So I think this is a skill that is needed if you want to really develop DeFi applications.
In my previous career, when I was an urban planner, one of the things that drove me crazy was I would spend a year and a half to create a long term plan for a highway corridor. And then that would get put on the shelf for 5 years and nobody would look at it. And I couldn't stand it. It actually like drove me insane. So did you find that there was something similar with models that you would create that were never accurate? And you felt like you were always working on these things and they never churned out the information in the way that you wanted to? Was this something that kind of like led to your departure from UBS, or was it kind of this this desire to build in this decentralized ecosystem? What was
It
kind of
was
like the reason why you left and came to build here?
it was the second for sure. So I knew that I wanted to build a business. I knew that I wanted to do something that is potentially useful, and that's how I ended up here. So UBS was nice. I learned a lot, made some good connections. But for me, it was clear that together with my co-founder, we wanted to do stuff, and we wanted to do stuff the right way. And yeah, that's how we ended up here.
So, what connections are you leveraging today then? Are you leveraging kind of the friends and colleagues you've made in the past few years in the DeFi space? Or are you finding that you're able to pick up the phone and call some of your own old UBS or TradFi connections to kind of pitch them on what you're working on?
So we try to do both. So the way we think about D8X is we built a trade engine that is fully on chain, and we built it as a white label solution. So what you can do is you can ultimately, for example, we have a front end kit. What you can do is you can take that front end kit, brand it in your brand assets as a third party company, and offer that to your customers. Now, as of today, our partners are mainly DeFi native organizations. Think, for example, of a spot DEX that doesn't have perps, would like to add perps, doesn't want to grow the liquidity, and just plugs into D8X using their own branded frontend. But ultimately, what we plan to do is to offer that also to more traditional organizations. So if you look at Europe, for example, Switzerland specifically, because I just know the example best, retail-focused banks, they started to offer spot trading in crypto to their clients. Now, how do they do that? They don't build up the whole infrastructure from scratch and simply, what they do is they use a white label solution and can offer that to their clients in that way. So we think that this is something that will happen as well on the derivative sides. And that's why that's at least one part of the reason why we went for a white label solution, because we think that if you really have decentralized tools that work, and those institutions are entering, you better make sure that they use them instead of them turning the space into something which I don't think it should be. So so to answer your question, I think we try to do both. It's not like I can pick up the phone and call the CEO of UBS, unfortunately, but it helps to have seen both sides and kind of have an understanding of what might be interesting for such players that enter at some point.
I want to just take a step back before we take two steps forward and maybe help define some terms so that folks who are listening to this who might not be in the quant space, who might not be really that far deep into TradFi or anything like that, just to kind of help provide some definitions for terms that might come up through our conversation. So if these are really simple, easy terms for you, then forgive me, but I just want to make sure we're all on the same playing field. So I'm just going to throw out some terms and just hear your definition, and then I'll throw out another term. So the first is actually white label solution. What is that, and why is it so important for banks?
A white label solution is basically, so you think of a company that builds a product, and another company can take that product, brand it under their brand, and use it. So why is it important for banks? Because banks usually buy products and don't develop them in-house. There are exceptions. Very large banks do that, but like medium-sized banks, they often buy a solution. For example, take Saxo Bank. It's a bank that offers classical trading solutions. And some of the smaller banks, they simply buy their trading solution to be able to offer to their clients' trading. So that's but in DeFi, this I would say can go further. So for example, our front-end kit that we developed, it's an open source, full-fledged front-end for PerpDex. If you are a large KOL and you would like to spin up your own trading front-end and earn revenue from trading activity of your community and gather your community around a central place, you can do that. That's also a form of white labeling, right? So you would use your KOL branding on your PerpDex front-end. So it's not just for banks.
Ah, perfect. Okay. Next term, perpetual futures. How do they differ from spot?
You basically buy the asset. Perpetual futures allow you to speculate on price moves, either price go up, price go down, by depositing a certain amount of collateral and then choosing a certain amount of leverage. And so the way I think about perpetual futures is basically futures, but without an expiry date. So you can hold your position open as long as you're not liquidated indefinitely, provided that you pay or receive funding rate payments. Depends a bit on the exchange that has set up the perps.
So I've always been kind of curious because cryptocurrencies are just such a volatile asset class. And maybe your average retail user who sees that they could go 100x with 5% price movement, maybe that excites them, but they don't understand that there's also factors that could liquidate them. So, what's like a good use case for a perpetual futures market to exist? Maybe it would be to hedge. I'm not sure. Maybe you could just help highlight that.
I would say if you look at the state of crypto today, it's speculation. It's clear. It's by far the most, like perp specifically, or like the most successful derivative product in the space right now. If you look at the more traditional space at TradFi, that changes. So their futures are mainly used for hedging purposes. And I think that over time, this will also be the case in crypto. One of the key reasons we designed the perps the way we did is specifically that. So we want to make sure that you have an on-chain perp that you can actually use to hedge yourself, meaning you don't pay holding fees that are very high. You pay just if you're on the side that has more demand, you pay a funding rate. Otherwise, you receive that. But if you look at the current generation of on-chain perp dexes, they are not necessarily suitable for hedging. They might be a great product to speculate, but if you want to really hedge yourself on chain, let's say you're an option protocol and you need to hedge your books, the existing products are not necessarily what you want to use because your costs of using them are very high.
Cool. And then the last kind of definition is just derivative pricing model.
So how do you price the product? So how do you price a perp, right? So you have spot. Some exchanges take the decision to simply price the perp at spot. So the entry price you pay is the current spot price. But that's not, so in that case, your derivative pricing approach would be very simple. What we do is different. So we have a model that looks at the risk from an exchange point of view and tries to set the right price for the perpetual given the state of the exchange. So in a nutshell, if the AMM is always the counterpart to every trade, and if in a given perpetual the AMM has a net exposure, let's say net long, every trader that enters and increases that net long exposure pays a premium, and every trader that enters and decreases that net long exposure, so reduces the risk from an exchange perspective, gets a rebate. And that premium and rebate are determined by the pricing approach that we use.
Cool. I am like torn on which direction to take this conversation right now because we did just go through the Bitcoin halving, and I'm not sure if that had an impact on the MVP that you guys have released because you have released D8X on X layer, which is OKX's L2, the OKX exchange's L2. And we're definitely going to talk about this. You guys have seen a lot of users on testnet. But I guess to kind of pull on this thing that just happened in the crypto industry, which was the Bitcoin halving, how does the reduction in Bitcoin's emission supply, how does that impact kind of the work that you've been doing and the work that you are doing right now? Have you noticed any difference at all, or is it just kind of a macro thing that is somewhat related to creating a perpetual market, but not really? What are kind of the relationships?
I mean, it has some price impacts. It doesn't directly that doesn't directly impact what you're doing, but it's you can use the product to speculate on those price impacts, right? It might have drawn, or it is drawing more attention to the space in general and thus to us as well, which helps. But I think first and foremost, this is kind of an event that affects the supply side of Bitcoin and has price implications, but doesn't have like first order effect on D8X per se, I would say. But definitely an interesting event, right? I mean, always great to see kind of, I mean, you can use very simple economic models to think about that, right? And it's great to see that live for the, repeat multiple times and you can draw your conclusions around that. But on the building part, I would say there's not a direct impact on us.
So I just want to pull on the Bitcoin theme a little bit longer. This was the fourth halving we went through. This was the first halving where the price of Bitcoin reached an all-time high before the halving event actually happened. So I'm curious, just from your quant mind and your kind of like macroeconomics mind, what are some other interesting figures, statistics, insights, anything like that that you're walking away from this most recent halving?
I like economists like stuff to be simple. So if you like simple stuff and you really take your economics 101 hat and look at the Bitcoin market as a supply and demand diagram, I mean, the halving is basically shifting your supply curve to the left, right? So for any given price, you reduce supply. Um, Now, the second main event is changing the demand curve, I would say, which is you have more capital that's inflowing through ETFs. You have more traditional capital that's inflowing through ETFs, which means that your demand curve, which before might have been mainly affected by retail entering and exiting, FOMOing in, and then panicking in the winter, now you have a different component. You have like more institutional capital that's in there. You have like even pension funds that are starting to slowly deploy, right? So your demand curve shifts, if you stay in a very simple model, will be more driven by what is driving risk assets in general, interest rate repricing effects, for example, than has been the case before. And I think this is something also what we see right now, right? So we had the halving yesterday. I think it was 24th of April. You had the first time when BlackRock's spot ETF didn't have any inflows. Um, this is kind of occurring at the same time as you have the market repricing future interest rate movements from on the US side. And I don't think that's a coincidence. And I think that's going to happen more often. So the demand side I expect the demand side to be more affected by traditional markets. And at the same time, the next halving will even be smaller in terms of quantity that the supply is being reduced. So I think where we are heading is a rather boring Bitcoin market. So that's my key takeaway. But yeah,
Yeah, when I bought my first Bitcoin in the summer of 2017, and the running narrative back then was the institutions are coming, the institutions are coming, and I haven't felt like the institutions were coming until maybe 2021, 2022. And now here in 2024, we have spot Bitcoin ETFs in the US. We have Hong Kong that just approved ETH and Bitcoin ETFs. So maybe the institutions are coming, but are they coming into the space through a traditional finance wrapper like an ETF? Or are they going to be, silently experimenting with like D8X and other kind of crypto native, blockchain native applications? What's kind of your outlook on how the institutions are coming into this space?
First and foremost, through traditional mechanisms, I think, at least right now. I think the appetite for a bank to, at this point in time, really play around with DeFi is limited. Especially, I mean, in the US, I think it's inexistent. In Europe, it might be there, but it's limited. But I believe this will change over time. So as an asset class, they are definitely here. They invest in it. I got like an ad from my pension fund company recently. Hey, do you want to invest 5% of your pension fund in Bitcoin? So they're definitely here for this type of for this aspect. But I don't think any, especially not any large bank, is currently really looking into DeFi. But I think this will change. This will change if there's some more clarity around how DeFi can be treated from a regulatory point of view.
So D8X is it's a decentralized financial application. Can you just kind of walk us through some of the projects and studies that led you up to building this? How did you guys determine we're going to offer perpetual futures markets as opposed to building a spot dex or building a predictions market or leveraging the skill set that you guys have to build any other sort of DeFi application? How did you settle on this solution?
So we looked at the existing on-chain solutions. We thought that there is room for improvement, especially from a financial engineering point of view. Spot markets are relatively simple to do, I believe. Also, perps, it's not rocket science, right? But it's a bit more complex from a risk point of view. And to do that in a decentralized way on chain is not so simple. So that's something that was intriguing us. My co-founder was also heavily into perps at the time. I had some research out there on how that works. This is kind of the skill set was there. The product is the one which arguably has the best product market fit currently. So from a business point of view, it makes sense. And we thought that we can pull off the risk part as well. So those things came together, and D8X was here.
So who are your users? Are they like retail degenerates? Are they maybe like institutional curious folks? Are they traders by profession and maybe DeFi is what they do on their spare time? Who have you found has been using D8X on testnet so far?
So as of today, we are live on Polygon CK via mainnet, and we are about to go live on X layer mainnet as well. On ZKVM mainnet and testnet, you mainly have DeFi users that trade. We do have some on-chain protocols that are currently integrating to hedge themselves, which is one of the key use cases we think D8X can offer. And we are also looking at, or at least talking to more traditional players that are interested to offer that to their centralized, still retail audience. So I would say the large majority right now are retail traders, but we talked before about the derivative pricing approach that we use. So this opens up a bunch of interesting arbitrage opportunities between us and other markets, spot or perp. So whenever you have, let's say, an imbalance on the exchange and that premia or that rebate is relatively large, you can arb that. And that's something which is interesting to funds that run delta neutral on-chain strategies as well.
So you mentioned basically chains that were built by Polygon and by OKX. How do you guys go about choosing which blockchains to build on top of? Is it relationship based? Is it technology oriented? What does that process look like?
So we originally decided to start on Polygon CKVM chain. That was mainly a technology bet that we made. We looked at what they were building. We thought that from a CK rollup point of view, what they do makes sense. we expanded to chains that are in that ecosystem. So Polygon has this chain development kit, CDK kit, that allows organizations like OKX to spin up XLayer, their current L2 solution. What we like about that is that there is the vision of having the egg layer, basically, which is connecting all those CDK chains by default, also others. But that means you can essentially execute a dApp from chain A that is sitting on chain B. And it's relatively simple to also have shared liquidity. So for us, everything that is within that ecosystem is interesting, but obviously not only. So, I mean, from a tech point of view, we are EVM compatible. So any EVM chain could be interesting as long as there is a market for D8X. The market might be retail, but the market might also be other protocols that are interested in hatching their books in an efficient way.
Got it. So the chain development kits are kind of what makes it easy to interoperate between different chains right now, just because there is that composability between support that is available for ZK EVM and XLayer right now.
Correct. So Polygon is building what they call the aggregation layer, which ultimately connects all those chains together. And the vision they have, and I think it's a good one, is to have that as kind of a shared liquidity layer that allows you to interact seamlessly in a way. They're not there yet. They hope to take the next steps towards the end of the year. But from a vision point of view, this looks very interesting.
I kind of want to brag for you guys. You reached 15,000 users on XLayer testnet, which is awesome. I mean, to even get like 1,000 users for testnet is amazing. So, how did you guys go about building that kind of splash so that 15,000 people would want to test? Did you go through some sort of trading campaign? Did you do some sort of marketing campaign in collaboration with OKX? How did you guys do that? That's very successful. Is it replicable?
I don't know. Maybe I think what helped was that we are the first perp DEX on XLayer, so that's definitely an added benefit. Then we were one of the first dApps that deployed there, and we worked closely with OKX during a campaign that they made. That definitely also helped. And now we are one of the first dApps that is on mainnet, XLayer mainnet, and the first perp DEX there as well. So I think the combination between being the first perp DEX, having OKX as an ecosystem partner that helps, was kind of a big part in achieving those numbers. And we are right now gearing up to replicate that on main.
Awesome. Is so I hadn't heard of XLayer until digging into the work that you guys were doing. So is XLayer also zero knowledge enabled? What are kind of the interesting technical aspects of this chain?
They rely on Polygon's chain development kit. So it's a chain built with Polygon's chain development kit. The difference to, for example, ZKVM is the data layer. So they are not writing the data directly on L1. They use Celestia as a data layer, but from a tech point of view, like high level, it's a Polygon CDK chain that relies on the same tech that ZKVM does. And the interesting part for us was that outlook to have unified liquidity as a perp DEX. That's a very positive feature to have.
So it sounds like you've mentioned unified liquidity maybe half a dozen times already. So I get it. You want to be able to move assets from chain A to chain B, and you want to be able to do it seamlessly and quickly. We don't want to bridge. We don't want to bridge on and maybe I lose my assets. Take 7 days to bridge off. So this makes a lot of sense. But what about the privacy enabled? Does the AMM that you guys host, does that require privacy features? Do you have to hide on-chain transactions so that maybe somebody doesn't perform a sandwich attack or game somebody's potential trade or numbers that they want to trade at? How does like privacy technology empower what you guys are doing? And I guess also, would you have been able to build D8X like 4 years ago before there was all this ZK technology that's starting to come live?
I mean, we can deploy D8X on a non-ZK rollup. That's not a problem at all. We technically could deploy it on mainnet, but it's just too expensive, right? So from a privacy point of view, what is interesting, and that's a feature that we offer, but none of our current partners is yet using, is to have private partner-specific order books. So you can think about, let's say you're a white label partner, you have an order book, and you only send orders on chain once they can be immediately executed. So nobody sees that besides you as a white label partner. So there's a trust assumption there from a user perspective, but nobody else sees that. Right now, by default, our order books are public, the ones that we currently deployed, and you can go and check what orders are sitting there. We really decentralized every aspect, including order execution. That means that anybody can be an executor, which also means that you need to be able to query what orders exist and are the condition met such that they can be executed. And if yes, you can relay that order to the exchange and earn an executor fee. So that's kind of the default setup. But especially if you dabble into more institutional partners that might want to also hide the order books for their clients, that's possible with the system we have, but not yet deployed, just to be clear.
Is the order book on chain?
Yes. So you post all the orders on chain. You can use our SDK or run one of our bots to grab the orders, and you can execute them. The same for liquidations. Anybody can be a liquidator. You can check the existing positions. You can see is the position liquidatable. You can initiate the liquidation. So I mean, this was one of the key features which we wanted to have. We don't want to have a centralized bottleneck. We don't have just one set of executors that we are running, one set of liquidators. We don't have just one front end. We have multiple front ends. So we really tried to decentralize the whole exchange stack, if you can name it like that, from start to the end.
Forgive me if this question doesn't make sense. I just know enough to be dangerous about DeFi, but I'm not in the weeds like you are. So, what were kind of the reasons why you guys chose an on-chain order book versus like an automated market maker?
Okay, so we have an AMM, but you can place conditional orders. Let's say you place a limit order. You say, I want to buy if Bitcoin is at 50K. Then that limit order is sent to the limit order book, and an executor can come and relay that to the AMM. Now, the AMM then checks, are the conditions satisfied or not? If the conditions are satisfied, the order is executed. If not, the order is not executed. So this is but this allows you to have the AMM setup, but also do conditional orders.
Cool. Thank you. I think something else that kind of like popped out to me is that D8X is leveraging Path Network for Oracle price feeds. Or Pith, sorry. So why did the team choose Pith, which is relatively new? I mean, the team's been building for a couple years, but like Chainlink is kind of the OG status for Oracle feeds in the Web3 space.
Yeah.
So what made you guys go with Pith over Chainlink?
So Pith is our main oracle. At the time we started building that, Pith was, and I think still is, the leading pull oracle. So you have essentially two fundamental oracle designs. One is like, I would call it the legacy push model, where an oracle pushes prices on chain. They stay there and protocols grab them, and they regularly push every few seconds, which also means the price that has been pushed can be read on chain, and you can front run that. So as soon as you have a mempool, as soon as you can read those prices, you have an attack vector that you need to somehow mitigate from a protocol design point of view. The pool model is different. So whenever you place a trade, you ask for the most recent price, and you send that price together with your order to the exchange. And that's what Pith had. They are not the only one that currently has that as of today, but when we started building, they were kind of the first big pool oracle that was out there. That's why we ultimately went with them. So we wanted to have that type of pool approach. Chainlink is now pushing something similar. They have it live on Arbitrum, I believe. So that is also an interesting option. But the main reason was really the design, and we wanted to minimize attack vectors.
How long have you guys been building D8X? When did like the idea conceptualize, and then when did you guys start like bringing on developers to build it out? And then when did the first kind of MVP go out live?
My co-founder started to work on the conceptual parts, the financial engineering model, relatively early. I think late 21, early 22. We then started to build the code base for a project we have been doing consulting work for, and then took that and made it into D8X. We went full-time on D8X in, I think, early 23. Yeah, I guess January 23. And then made a pre-seed round in summer last year, Polygon Ventures and other investors, and went on zkVM mainnet in late December last year, and X-Layer mainnet now in April.
When we were having at the beginning of the conversation, we were kind of tongue in cheek talking about how forecast models are never right. Are there any surprises that you and your team have found both on ZK EVM mainnet and maybe now with Xlayer testnet that caught you guys off guard? Some valuable lessons learned that you were able to implement into D8X? Was there kind of any gotchas or surprises that happened to you guys after going live?
I mean, there's like challenges that come up when you build on a new chain. That's something that we underestimated at the start. So if you build on something that's fairly established like Arbitrum, your life is considerably simpler than when you build on something that is new, where RPCs don't work at the start, and you have to figure out stuff. So this is something that we learned from a risk management point of view. The system worked as we thought it would, so that was positive. So no surprise from that point of view. But definitely the challenges of building in a new environment for this space new. I mean, this is something which we learned for sure.
So we're kind of nearing the end of our time, and the last few questions I want to zoom out and maybe talk about broader kind of trends or just kind of like bigger, less in the weeds things. I'm just curious to hear what your perspective is on the outlook of macro. We talked about U.S. interest rate. We talked about U.S. interest rates, the appetite for risk on assets earlier in this episode. But are there maybe a good way to put this is: are there any blockchain enabled dApps or trading tools or processes that make it possible to hedge against this type of uncertainty moving forward? Or if not, are there any other kind of macro trends that you're keeping your ear to the ground for as it relates to the work that you're doing on the perp decks?
Micro outlook, I think, is mixed right now. So I would not be surprised if you see a relatively rough path for risk on assets until it's clear what happens and when it happens to interest rates in the US. I think so. Switzerland started to cut as the first major, if you can call that, economy. They have cut it a few weeks back. I think the European Union, like the ECB, will follow relatively soon. The US, not so sure. Now that gives some headwind, I would say. If you want to hedge that, I mean, if your view is that risk assets have a hard time, you short them. You can do that on D8X or on any other exchange that allows you to trade perps or futures in general. I mean, there are definitely ways to hedge yourself. I think long term or longer term, it's clear that interest rates will come down also in the US, and it's clear that this will have a positive impact on risk assets. my forecasting models are all broken, so my timing is not the one you should listen to. But I think from a high level perspective for what will happen, this is the way I would look at it.
Or I guess to add on to that, are there any DeFi trends that you're keen to watch play out? And what are those?
So we are looking with a very interested eye on anything that is close to liquid restaking tokens. I think there are some protocols that get it right. So the way they set it up, the way they designed their LRT. I think what we will see is different perp dexes, for example, maybe D8X, that use LRTs and LSTs as collateral. So that means as a user, what you will be able to do is you can trade while your collateral keeps earning for you. And as an LP, you can become an LP and you can earn on top of what you already earn from LRTs and LSTs. So this is something which is, I would say, the closest to us, and for me at this point, like very interesting. And we're also actively looking into that.
Are there any projects that you think are more particularly sound or you're interested in implementing into D8X? Am I asking too much?
No, but I mean, like this week we had like a depegging event in one of the major players in the space. So I think there are some design principles which seem to be more prudent than others. I mean, yeah, I personally like EtherFi, the way they approach it. So always happy to look out for potential collaboration there. But they are not by far not the only player that gets stuff right. I think just the outlook of being able to use productive assets when trading is interesting per se. I also think there are many projects that work on yield-bearing stables. For example, Angle, I like what they did with their yield-bearing euro. They now just replicated that playbook for the US dollar. They brought staked USD to market, which I think is also very interesting.
I didn't ask this earlier when we were talking about the platform. What are the assets that D8X supports?
On mainnet right now on zkVM, we are in a beta phase, so we have just FX and like we have the euro there and some blue chips. On X layer, we are about to launch a USDC collateral pool and an OKB collateral pool. In each pool, you will have crypto blue chips and more longer tail cryptos, and then we will also have FX rates. We can do commodities as well. So if you look at testnet, we have gold and other commodities up there. We just take it from step by step and see what people are interested in using. But from a design point of view, we could basically support anything for which we can get the spot price.
Cool. I always feel bad asking this question, especially when you just spent like the whole 45 minutes, 50 minutes talking about how you spent all this time, a year and a half to finally launch on mainnet. But like, what's next? What's on the roadmap? I know that mainnet on X layer is a monumental achievement, being live on two mainnets. Maybe for the rest of the year, what are you guys hoping to achieve? What do you have your eye on? What's kind of like maybe a larger scale roadmap item?
So we will for sure launch on a third chain this year. We will for sure add interesting collateral options. Some of them I might have touched upon earlier to the exchange. And we will integrate more partners. So you will see more Whitelabel partners tapping into D8X, using D8X to serve their own retail clients. I think this is the three most important product-specific points which will come out. We also will launch our D8X governance token to bring the decentralization one step further out. This will also happen in this year. So exciting, packed.
Congratulations. I mean, to ideate and then raise and then launch in 1 year is great. And then to have these really exciting items on the roadmap, it's nice to feel like there's progress to be had and made. So if folks want to keep up to date with you or with what you guys are doing at D8X, what's the best way that they can do that?
Right now, Twitter, I would look at D8X_exchange, or you can also visit D8X.exchange and find all the links there. A good place to talk is Discord. We have quite an active Discord community. Also, if you have questions, want to interact, have proposals, if you want to use us as a white label solution, just hop into Discord and ping one of the team. Somebody ping me, ping anybody. Happy to talk.
Awesome. Well, Caspar, thank you so much for spending an hour to talk about your perp decks. It was awesome, really fun to dig into for research. I found it fascinating to hear about the ecosystem you're building in and why. And also just really liked to talk to a quantitative economist. I don't think I've ever had one of you guys on the pod before. So it was a pleasure.
Thanks a lot for having me. It was a great conversation.
Awesome. Well, I look forward to sharing this with everyone. And hopefully we can have you back on the pod in a year or two. Have a good one.
You too. Bye-bye.
Cheers.